Good morning, everyone. Microphone check. Screen check. Looks like everything is working correctly here. Good. Welcome. Good morning, SSFTG family. We're on time this time, hey. With no router troubles. I hope you all have had a chance to rest up, get ready for the day ahead, all that fun stuff as per the usual. Make sure to read through the morning prep PDF on the right side of the screen. Very important to understand everything that's inside there. And also, just a quick note for you all before we jump on in, if you're watching on the YouTube side of things, the stream does have between a 5 and 30 second delay, depending on where you're logging in from, which will definitely impact the timeliness of what I may be talking about at any given moment. Good morning. Welcome. Rolling into Wednesday already, huh? Inventory's right around the corner. 10:30? Man, I don't know. Crude oil's a wild one. We'll have to see how it all wants to play out, I guess. All right. Just want to take a second, like we do every day, to thank all of the new members, subscribers, Academy students, VIPs, and everyone else in between. Thank you all so much for the support. I'm super excited to have you all on board, and welcome to the SSFTG family one way or another. If you aren't a member yet, you do have a few different options to check out if you are looking to further your trading education and career. One of the easiest ways to jump on in is right here on YouTube. You can check out the join button below the stream, and that gets you access to the extended hours room, where we continue from the morning room with a little less delay to the end of the session. YouTube members also have access to the community area, where I post all kinds of different chart setups, stock charts, analytics, and more. Of course, every member gains access to the Discord chat server, and you get the awesome badge next to your name to show your support here on YouTube. Plus, it just looks cool. The best part is, it's $5 a month. You skip a coffee at Starbucks, you're all set. So it's kind of nice there. Now, if you want to take a massive step further in understanding our trading approach and what I'm doing every day in the room, look no further than the Day Trading Academy. This is where you can learn how we do everything, but listen, this isn't a small little PDF guide that you're going to finish in an afternoon, all right? Yeah, we do have a quick start course, but I really, if you want to dig in like the Academy does, you're looking at about 19 plus hours, and that's going to be growing soon. Of video course material along with the course. On top of that, you have homework, study guides, and that's really just to make sure that you're understanding what's going on while you navigate the course, which I review personally, and you get the DTA upgrade discount, which is pretty awesome. Then there's the top floor, the executive suite. That's where you're going to find the VIPs. VIPs have permanent access to everything that is SSFTG. The Day Trading Academy, private Discord chat, future updates, new strategies, monthly webinars, which we just had one this past weekend, one-on-one access, and we have the new one scheduled, by the way, and everything else. So it comes as part of the package. VIPs gain access to the fully dedicated, non-delayed stream for the entire session, meaning that they're on the fastest connection you can get without any delays from start to finish. So whether you're here for the very first time or you're one of the VIP vets over on the dedicated stream, welcome. I'm glad to have you trading alongside of me today, analyzing these crazy markets of ours. Let's take a look at some charts, take a look at some news, see what's going on as per the usual routine here. Don't forget to grab your morning DP levels. Those are posted for you this morning on the major 7 that we take a look at. NASDAQ, S&P, gold, crude, euro, Bitcoin, and Ethereum. It's a race every time, except I tripped over my shoes on that one. If we're looking at the news for today, we do have a couple different things that are happening. Obviously, today's Wednesday, so crude oil inventory is at 10:30. The forecast for the inventories is a negative 2.928 million, which would be seen as relatively bullish. Good indications that buyers would want to come in. You have less than expected, you raise the price, right? Now, if we look at the API, which I also posted down here for you, the API report tells us that we should be getting closer to a -5, negative 4.728 to be exact. So the fact that the market's already expecting a bullish number, and the API is giving us a clue that the number is going to be even more bullish, or very likely to be even more bullish, buyers are going to be in a little bit of a hurry on some dips that we get here, depending on what the chart looks like, and we'll get to that in a second. Now, today, if you wanted to rock the boat a little bit, at 1400, we have the FOMC statements and Fed interest rate decisions. Oh boy, these are always a blast. The Fed interest rate decisions forecasted 0.25%. Usually on FOMC day, it's early in, early out. Nobody really wants to hang out for too long because these days are typically a bit of a train wreck. Lately, though, FOMC is super up in the air. You know, we're coming off of a gargantuan V bottom off of I don't, oh man, don't even get me started on the rabbit hole here before we get to the charts. This thing's crazy. But we've got a lot of news coming out after some serious big technical moves. That's something to kind of keep our eyes on. And on top of that, at 14:30 FOMC press conference, normal stuff. Your normal FOMC thing, if you will. We'll see what they want to do, but it's kind of interesting how that's all coming out. Let's take a look at the S&P first and start off there. Now, as far as the S&P is concerned, we did have a very nice pullback on the move down. And if we go from top to bottom on the impulse, this is a 15-minute chart, so it shouldn't take too long to load up. There we go. We have that top-weighted POC that was up here at 44.03 quarter. Now, that was the impulse POC, so once this high was made, this POC was already in play, so keep that in mind. When we broke underneath it, which was incredibly obvious, jeez, when it came back, treated it as resistance, tried breaking above it, the bulls even gave it a good old try, and then failed all the way back down. We come back to it as resistance, resistance, resistance. Wait a minute, what's going on here? Right? We're continuing these higher lows all the way up. So with the higher lows and higher highs, yes, this resistance here, okay, but you know, all things considered, this kind of smells like sellers are failing. If we creep this a little bit further forward, see if that changes the perspective at all. We are still at, 44.0350. So it hasn't really changed, but I mean, man, this isn't what sellers want to see. We shouldn't be showing these higher lows, higher highs. This type of movement isn't what bears really want in order to get things going. In the short term, if we're looking at it from the top to the bottom and going across, that's fantastic. My data's bugged. Let me go to the end. Will that work? There we go. We are actually kind of pinned between the two. The sellers have already lost their grip from the bottom to the top, and the bulls are beginning to transition. The only thing that's left is 0350. And the amount of times that we've tested it with higher lows and higher highs, I don't see them hanging out for very long. I don't know. And it just doesn't seem like it's a very good idea to short when we're in that kind of situation. Really, really awkward, and we're getting pinched between those two POCs. Looks a lot more bullish, but, you know, that can change in an instant. Looking at gold, we've got a pretty nice bit of consolidation still. Not like much has changed. If we zoom out to the 60-minute chart, we can see that, well, not really much has changed. We haven't gone anywhere. This thing is just incredibly slow. The one thing that we do have is if we go from top to bottom, and you remember the POC that we had that was floating up at the highs, then they transitioned to the downside, and the euro couldn't keep up with it. This kind of movement to the downside now with this continued POC, we drive it a little bit further forward. What are they doing? Are they still long? Have they transitioned out? What's going on as far as gold is concerned? Because where we cycled off of, that's a big spot. Like, this was a wide open door. They just needed to walk through it. And as soon as they stuck their face through it, they just got whack-a-mole right back inside that door. So, I mean, that really leads me to believe that something happened here. The sellers could be looking for another move back to the downside, and we have that larger POC, which is down at 1778. So, I mean, realistically, it makes a lot of sense for a slightly bigger pullback. If this is going to reverse back off of those lows and transition back up, well, if this is wave 1 into wave 2 is usually at least L3, L4, preferably, you know, maybe even L5. Before it continues back to the upside. It hasn't even come close. We're just now pulling back into the right area. Tough spot. Hey, how's it going, Mediterra? I hope I said that right. We've got, so, I mean, gold is in an area where bulls are still trying, but, man. We'll see. I don't know. Looking at crude oil, we're super sideways. Massively consolidated, absolute train wreck. But, I mean, obviously we're going to have a POC up at the highs here. If we're looking at the overall movement, though, this is no, like, small POC. This is a POC of the ages. Like, if you look at the volume difference here, it's absurd. The last volume node that was even close was back here, and it's up here. So if we're looking at this contextually, the assumption would be nice drive down, sellers have another move lower, they're probably going to be looking for another move. That would be the assumption. Obviously, that didn't happen. And a lot of sellers will have taken that move, and we can see that reflected in the volume. Now, a lot of those sellers may have also exited, which might be that extra volume there, or would explain the VVP that formed right above the highs. Kind of makes sense. They hit all the stops. But with this continuation back to the upside, follow the rabbit hole a little bit. They build a little bit more volume. Maybe they're trying to build their averages up. We've seen this before. We just creep above the highs and it V-tops and goes all the way back down. But it didn't happen. And as far as the volume is concerned, it only looks like they've added maybe half of their normal position sizes. So out of 100, they added 50, right? Keep math easy. That's not going to do much for their average in terms of looking to exit. And if it was going to go back down, they really didn't need to do much for their average. But now that it broke aggressively higher, you can see the volume kind of picking away, and then it just goes ripping. And a ton of volume starts stacking up in the 70-50s. Well, if we look at where that volume is, that's the first time that they've actually gone above that node here. Okay, well, now maybe they've at least gone 1-to-1. If they had 100, now they've got 100 more. Their average is probably floating about in the middle, give or take, around $69 or so. Continues up again, right? And another one that finally breaks above, which is way over here, right? Massive volume. This is no joke volume. We're talking like, okay, maybe they doubled up here. This is like triple, quadrupled up GTFO out of the trade. I don't want it anymore type volume, right? So with that kind of movement, this flush to the downside, man, that makes a lot of sense to see that kind of sharp V-bottom reversal. We know a lot of these sellers potentially exited. And now that we're getting higher low transitions all the way up, I mean, wow. This could very easily be the middle point of a significantly larger breakout. And if you're talking 65 to 72, basically, you're looking at another $7 up. So you're at almost 80. A lot of potential here if crude can crack higher. And we've got bullish inventories to add to that. What would be, honestly, perfect fire masochist in me, like back in my mind kind of thing. Perfect thing would be really bullish inventories, see the market tank, freak everyone out, get down to like the 7120s. That's where they accumulate everyone freaking out, and then see it V-bottom or right back above the POC and go screaming up to 80. That would be the perfect scenario in my mind. Whether or not that happens, I don't know. We'll see. The euro, I don't know. Do we waste the time looking at the euro? I skipped it for a couple days, I guess. Fine. Let's look at the 60-minute. We got a couple minutes anyway. Looking at the larger perspective, starting from the top down, going all the way down to the bottom. Have they finally transitioned the POC? Golly, they spent like, what, a month and a half, 2 months down here? Finally! Holy crap, they shifted the POC. Oh, wow. Finally, jeez. Ring the bells. Golly. Okay, so finally, we've been waiting for this for a century and a half. We've got the POC shift to the downside at 1.18100. Now, as far as the Euro bulls coming in, we haven't seen it. That's no proof at all. Seeing the volume shift down at anything tells us that the sellers were short. They probably took profit, right? Let's be real here. But the fact that this is larger volume enough to take the POC would potentially suggest that if longs were stuck, and they were probably stuck up here, we see them building in twice, right? 1-to-1. We've got a bounce right out of the middle. Honestly, I think that was their exit at break even right there. But let's just follow the rabbit hole for a minute. We've got a huge amount of volume. They finally build another chunk of volume. That's the only other time that it's been larger. So it puts the average right in the middle. Right in the middle is 1.2. Right in the middle is previous double top massive structural resistance. This is the same resistance zone that gold is seeing right now. So, I mean, if the euro is going to creep higher, that's fine, and it's got a ton of room ahead of it to go. But if we start creeping up into those 1.2s, my opinion's probably going to start shifting. Bitcoin, more continuation back to the upside, cracking above 40,000, getting almost to 41. Sharp little pullback here, but you know, again, this is the continuation that they needed to see on the daily chart above those larger POCs. I mean, I don't know, something in the back of my head, and I can't shake this feeling, but this rally feels like the last time we had a false rally before a massive dump. And it looked incredibly strong the last time around. And I was trying to dig through my charts, and I couldn't find exactly where I was thinking of. And maybe my memory is just going bad in my old age. I don't know. But I swear that the last time we had a major rally, that we had a really nice false drive to the upside. Yeah, right here. This is what I was... Okay. So on the daily perspective, I was zoomed in too close. On the daily perspective, back when we had that initial rally up to 19,000, basically 20K, we drove really, really aggressively down, built a strong shelf, dove down. That was at 80-something% pullback, and then continued up. Huge rally up before then getting chunked in half again from 13 all the way down to 4. Sorry, in half, sorry. Like in 80% again. Back to the downside. I mean, just getting absolutely annihilated. And it looked incredibly strong. Now, it's not to say that Bitcoin can't have an incredible rally here, right? If we look at the breakpoint when they made it back above, even from there, it still made it another 50%. So there's definitely a lot of potential. But my concern is that we haven't had this final flush, this vindictive move yet that usually sparks that big ramp. And you can feel we're kind of early. It almost feels like we're still in this phase here, building the shelf. I can't shake that feeling that we're still in the shelf. We were talking about this a couple days ago before I go too far down the rabbit hole. How a typical pullback on Bitcoin is around 80 to 70%. That's its usual double value. This is only 50%. It just doesn't fit. It doesn't make any sense. This isn't typical as to what the market does. It's not that it can't do it here and go all the way back up to the highs, but I just don't see it. The volume is proving it right now. So it doesn't matter what I think. I have to be long, right? So keep that in mind. Like, it doesn't matter if I think that it should drop again. I've got it marked up to where I want it to go. As long as we're above that volume on a daily, I have to assume we're bullish. I don't have a choice. But, right, in the back of my head, I know I'm not going to be holding too many bags. Just saying. All right. Swap over to the NASDAQ. Give me 1 second. I'm going to find my sweater. I am freezing. My AC, I don't know what the heck's going on. Hold on. All right, there we go. Jeez. I'm not built for cold weather. He says in the middle of summer. Ay, ridiculous. Anyway, as far as the NASDAQ is concerned, looking at the daily perspective, as disgusting as this is, it did it again. I mean, that's what it comes down to. The average pullback on the NASDAQ so far in this rally up, 2.26, 1.73, 2.31, 3.54. Split the difference on the high end and the low end, you end up at around 2.3. And this most recent pullback, hey, guess what? 2.37. So they're following straight along with value. We have a ginormous bear bar off the top. And if we look back historically, every time we've had a very strong bear bar off of the highs, it typically bounces back within a few days. Not necessarily the very next day. In fact, the very next day is usually a bit kind of gross and weak. But usually they start bouncing back up towards the highs within a couple days. They might have another day of follow through, but this is incredibly strong comparative to what we have going on right now. Now, the other scenario is that if this happens, now notice there's some differences here. This was not the high. This was not the high candle. That was the high candle. The bear bar was not the high candles. And we also gapped down very aggressively to the next one. there was some excess context that would allow that to drive lower. So not necessarily fitting the bill. Before that, big bear bar, very obvious, went sideways for a little while, back up to the highs. Kind of get the idea, right? So the way that this is moving, the anticipation is that, I would love it to close way up where we are right now, but I don't see it happening. That's not what it does historically. It doesn't just go rocketing back up to the highs. It usually has a really weak bull close or a trap underneath that low and then closes back up again. So I've got a little bit of distrust here this morning for the bullish continuation. Not to say that I can't go long. We're still above the POC. We're still making higher highs. We just came off an all-time high with a washout. I mean, all signs point to still up. But in the back of my mind, there's still that little, wait, that doesn't quite fit what we've seen before. Now, the last time we said that doesn't quite fit what we've seen before, that's when we flushed all the way down here on the NASDAQ, down to that 2.38% pullback. Now, I want you to take this in, right? I'm going to skip over the 60-minute chart because we've got about 9 minutes until the open, and we're going to probably use a decent chunk of that learning from this chart here. Because this is a multitude of stacks that we've been waiting for days, okay? And so I really want to drive the point home of how all of this structure kind of worked out. Because remember, the original rally started off with this gigantic bear drive to the downside that reversed all the way right back up and finally pierced above those highs. The way that they pierced above those highs was incredibly aggressive, and it was on this massively overextended fifth wave extension. When we started correcting back, ABC, okay, here we go again. We're probably going to kick off. And then we flush back. Now, where do they flush back to? Remember the general structure of Elliott wave and all of those without looking at any of the other structures. It typically wants to pull back to where? Wave 4, wave 4, right before the rally. Oh, what do you know? Where did it bounce? Right off that. Now, along with that, where did it also bounce? 14,775 should be a gigantic heads up, given the fact that it made a low at 74 quarter. That was the POC, the confirmed POC from top to top. All the way, the whole pullback. That's all that dive down was. So this is incredibly stretched out on a massive, this is a huge drop. But this is the thing that you're looking for in terms of break-even rejections. If these were shorts that were looking for a continuation down, which they very well could have been, look at the structuring. Why wouldn't they be looking for an ABCD correction to the downside? It makes perfect sense. Well, it didn't work. So when they got dumped on, they weren't really given a chance to get back out again. We start building incredible volume back up towards when we pop up through the highs. We even shift a short-term POC to 15,100. So if we look at the volume comparisons, here's the volume on the POC right there. And the extra volume, which it's kind of tucked behind there, but it's right there. So they're about 1-to-1. Which would generally suggest that you've got around a break even at the middle. Do you notice where that next POC showed up? Okay. Wait a minute now. We might just have some break evens, and not just break evens. Break evens in the sense that they were able to get all the way back down to the original POC. That's like the best case exit at break even. They were able to enter all the way back up here, exit at break even on the initial position, which was probably long gone by then, to be fair. They're building in, after all. But realistically, exit at that original point, and then dump everything. That's the all-time exit. And man, did they hit it. That thing went screaming back to the upside from there. And now we've got that POC stuck in the middle at 14,920, which we are now above. The thing that would make a lot of sense here is if we continue this a little bit further forward, because again, that 15,100 POC it's hard to see, but it's right there. And the last volume was right there. We've gotten them out of break even, basically, and more than break even. Now that we're rallying back up, this could very easily be a V-bottom all the way back up to the highs. But in order for a V-bottom to confirm, they've got to break the top of where the V started. That's the all-time high. So if the market's going to pull back, really, at this point, if it's going to be a V-bottom, it shouldn't pull back much. Like, buyers aren't going to want to see it pull back very, very far. Maybe down to a short-term wedge. Maybe a quick dive down at the open to test the POC at 920. But they're not going to want to see it stick around for very long for fear that we end up going sideways between 920 and 775. And then we get stuck here for the next day or two. And then that's that daily candle coming to fruition. So really kind of take in how all of this structure took place, because they did it in a really wild, wild west way. Like, you had to be on your rodeo boots on, ready to go, buying at 75 if you're going to buy into that thing. That felt like grabbing a chainsaw out of the sky while riding a unicycle down a tightrope, you know? I mean, absolutely insane feeling. But look at the bounce. Now, if we go back and we look at it on a faster time frame, we've got that bounce at 75, which was right there. That was 75. So it spent, I don't know, 3 ticks underneath it before reversing back up. I mean, when you've got that kind of movement, what I'm curious of is, like, how much volume did that have to take over? Or was it just a total lack of interest from the sellers that just sort of gave up? And there's not a huge amount of volume. So in terms of failure patterns, really, they didn't allow a ton. I mean, maybe an L3, L4 if they're lucky. Continuation back up. Let's see. Yeah, L4 to the tick. Another pop back to the upside, back to L3. More confusion. No more confusion now. Breakout above the highs with an L1. We've got, they missed the L1 on that pullback, dove to a 2. Pop back up to another high. Couldn't quite get it when screaming away. Jeez. They finally got the L1 to the tick right there. So, I mean, there was very little opportunity to jump in that, and you had to be trading it at like 130. I wasn't around to actually do anything, so disappointing. And when I did try, I felt like I got dumped on at the end of the day and jumped ship before it actually popped back up. Yeah, oh well. C'est la vie. So, when we're looking at today's movement, we're coming into, there's some concerns, you know. I've got some issues with this. From the bottom all the way up to the top as far as impulse is concerned. Oh man, we've got the POC way down at 14,934. Confirm POCs for the bulls, because we do have to look at it from both sides. Oh, really? That POC is going to be right there, huh? Oh no, they never broke a new high until over here. Hang on. It's probably still there. Probably not going to change anything. Hello? My indicator died. Okay. Let's try again. That's a miss on the highs. That almost got me. That tricked me. All right. So back at 88 is going to be the zone of interest if they're going to dip back to anywhere. I like market profile when it comes to confirmation of the psychological backbone of what I'm looking at doing. And the nice thing about market profile is if it tells you that you're wrong, it's pretty obvious and you can kind of reverse your thinking and adjust. So when I'm looking at as far as market profile and order flow and things are going from that, I'm not looking at values and I couldn't care less about that. I'm looking at the majority of POC and the psychological impact that those have on what could be going on. Trap traders and successful traders alike. A little bit of a different spin on it. But yes, I use order flow a lot. One minute until the open, right around the corner. As far as the S&P is concerned, we are looking at just an inside gap right now. They've got a minute to go. Talk about a questionable spot to be opening up. Yikes. 928, that's a great question. And I apologize if I say your name wrong. I'm terrible with names. Kittis? I kind of dig it that way. But anyway, the 928 is the final cutoff for modifications of at the open orders. So an at the open order is something that takes place usually more on the stock side of things. But at 928, that's the drop off where they can no longer modify those orders. So there's a big influx in final modifications. And that usually has a lot of pump and dump and jumping around on the micro phase, which you'd see on like a 500 tick. Sometimes it can be very aggressive. Market pulling back just a little bit here. Currently 15.011 is the zone that is causing some trouble. And from the continuation to the upside, on the deeper portion with the L4 into L2 into L2. I mean, an L2 would be the next one up. Yeah, no problem. Rechallenging the 15,011s. I think it makes a bit more sense like that. Bulls pulsing back up. 11 might be the last ditch for bulls to take that back to the highs. I tried to get my scalper's target. I couldn't get it. I couldn't get a fill, so I exited back at break even when it slid back negative. Bummer on that one. That sucked. Jumped up 13, 14 ticks for a quick scalp off the POC rejection and didn't get the fill. Oh well. It's too far up for me to be holding on and hoping that I get larger targets right now. If we get a deeper pullback, then sure, but right now I'm just in scalp mode. From the base all the way up, now that we have three very obvious presses, we've got the POC, which is still hovering way the heck back at 934. 15,011s is the break point. So if buyers are going to hold it, this would be the spot that they do it. It just seems like it's really late. This is a tough time for buyers to be buying this far up. Not to say that there isn't a lot of room. Remember, with a V bottom, it is going to feel awkward. But the upside objective's all-time highs if they're going to take it. The problem is if they slip here, the downside's 920. That's a toughie. Let's see if we can get a bit more of a pullback here. That one's not really going to do much anymore. They might still be trying to reach back for those 88s. If the 88s don't hold, though, again, there's another problem. The downside would be the 53s. It's pretty widespread down here. I've got like a 1-to-1-to-1 kind of move going on here. Still, there's a lot of volume building in the 90s here. That leg down is likely going to see at least an attempt at another press, though. POC just shifted to the downside, eh? Wow, did you see that volume build on the 90s? Holy crap. Big push to the downside. They better hope they get back above this 90s, otherwise these 80s losing grip. Remember, downside's 53. Holding previous POC, likely a lot of traders maybe getting out at break even. Even? You know what I mean? Break even. Underneath this bull bar, sellers will possibly be looking for a breakout. It's forcing traders to be really low. I still don't see enough proof to want to short this kind of market. I think it makes more sense to wait for the push back to the upside. There we go. And look for bulls to try to rally this back for a larger move. As far as the continuation goes to the upside, I can't look for a ton, but realistically, looking for at least back up towards 2... inside volume would be at the 10 halves. Nice bear bar down. Sellers may try to operate off of that and get that to pulse back to the downside. Wow, that bull bar just showed up out of friggin' nowhere. Holy cow. Strong bear bar to the downside after that type of follow through. Likely, with the quickness of how that candle showed up, a lot of traders might be hesitant to do much. I'm definitely leading off of the gas pedal at the moment, just trying to see what they want to do. I like the pullback, but the next pullback area, if they start cutting through these 80s, is going to be down towards the 50s. So I don't want to add too much risk to the table yet. 2-to-1 is still inside the highs, but if they go much lower, we're going to have to modify a little bit for scalpers targets instead. Another continuation bear bar to the downside. If this is going to go a little bit lower, where does that ABCD line up now? 1-to-1 would be right at the base as well. Yep. So it doesn't make any sense to add risk here. Not until we get down to 50, 55 to 50s down there. Nice morning dip-a-dip. Almost a 1-to-1 ABCD down. Nice little pulse down into the lower 60s. I'll utilize this move down to do a bit of work on my average, but the understanding is that it'll still probably go down towards the 50s a little bit further. There we go. Add a few extra for the short-term bounce. S&P settlement is a little bit further down, 83.50. Ooh, okay. They might be getting back to Wave 1's POC. That's a little further. That's at 34s. Where did they make it? 36? From the larger perspective, we've still got down to the 920s in terms of a zone of interest. Now, realistically, the larger perspective, we've got the 2-to-1s, which are still above the highs. That's kind of disruptive a little bit up to the 212.50s. I'd like to see at least back up to the 100s. Really? Okay, cool. No fill down there. Thanks. That's fair enough. A lot of wick failures, still displaying sellers trying to get that further move down, which would make sense because they still haven't gotten that test down in the 33, 34s. The 50s lost their grip underneath, but this could still be the initial slide. We haven't seen the POC shift from the bigger perspective, although there is a truck ton of volume shifting at 43.50. Sheesh. Another bear bar, possible continuation to the downside. Quick tap into 33.25. POC shifting down 43.50. Could be the potential short-term shorts if they were short, obviously. Their objectives are getting filled at the 43.50s underneath the previous swing low back at Wave 1's POC. That makes a lot of sense. Still got a little bit of wiggle room, but I'm going to have to start letting a few go here if they're going to continue to pressure down too much. These snaps back up are just ridiculous. At the moment, a 2-to-1 still fits inside the highs. Whoo, barely. I've got room for one more before I start losing patience and starting to position my way out of it. Realistically, if they're going to start sliding below Wave 1's pullback zone, the next likely objective is going to be a pullback back to the POC they left behind and then a subsequent dive to the downside. So at the moment, right now, I'm trying to get my average around the 940s so that I can look for a potential exit, at least on the majority of it, to drive my average in a more favorable place to get the rest. They might not give me a chance to do that, but... Continuation to the downside on the S&P would show candle gapping between bar 1 and 3, although it's still developing. Would show bear side continuation through settlement down to 78.50. A little bit more difficult to go through settlement, but it's there. As far as the initial drive, whoops, these are old volumes. We've got the first 15, which is still developing, but that's back in the 940s. My 2-to-1 is definitely not in the right place anymore, which means that I've got to revert back to having to be a scalper. More continuation down. Looking across the board here while I'm waiting for the NASDAQ to to rip apart all of the bulls who are stuck long. We've got the continuation down on crude oil, which is pulling back to 71.91. It's getting close to, you know, that zone of interest, but man, I would still really like to see that deeper dive into the 30s. Outside of that, there's not really much. Euro's losing their grip underneath the 18,100s. Gold's sideways and dead slow. Got the bulls attempting to get continuation. I haven't really been able to get my average in the right spot. The last time we had a POC shift was at 14,940, which got left behind. Those were traders likely on from here and building in aggressively into here, which is funny because that's where I was as we continue down along the way. Those traders still haven't been allowed out, and, well, until that happens, the sellers are going to either continue the pressure down, and the bulls are going to have to just kind of deal with it at the moment. If we break through the overall lows underneath the 92, settlement's not too far away, but that's likely where a lot of the bulls will try to get their averages in a slightly different location, myself included. Where it is now, if we're all the way down at the lows, I would rather eat the loss in the initial portion, reposition up down here for a swing back up, the way that it's working, at least. The candle gapping to the downside is still open on the S&P. Hasn't closed up. Got 30 seconds left on the ES. As far as the morning continuation goes, they've got the POC, which ended up being at 43.91. POC shifting down. Three very obvious and definitive waves as well. Sellers do confirm on the third candle for the S&P with the POC at 91. What a nice little spot there. Wow, that was a lot of volume that just jumped in at the 910s. Whoa. 945 is out of the way. We do have FOMC later today, which obviously we're having a bit of fluctuations going on here. I'm going to reduce just a little bit, eat the loss on the initial portion again, just to drive my average in a more favorable location. I still like this area, obviously. But they've got a lot of work to do. And I would rather have my average further down if they want to cycle back up. Plus, that means that I believe, if my math is right, oh, it's just off. Fine, whatever, close enough. 2 to 1's back to the highs. From the 15-minute perspective, we are back in the 920s. That was that POC test of the impulse from the top down, and then kind of back up again. Give me my wrist tool. Come here. There we go. So again, I'm trying to get my average in a more favorable position. The most beneficial would be 1875 and lower, but I don't have the amount of zeros that JP and Goldman do, so I've got to do work in a different way. Bulls still just kind of hanging out, not really doing much of anything. POC shifting to the downside on the S&P now after 3 very strong bear bars down. Candle gapping is confirmed on the S&P, so the downside, I thought I had my drawing on there. The downside for the candle gap is 78.50. Waiting to see the bulls try to get more continuation to the upside. At the moment, the average still isn't in the best spot in the world, but it's all right. We can definitely do a bit more work. Would you consider selling Bitcoin currently? Like I said, I mean, I've got my reserves when it comes to Bitcoin in the way that it's sort of forming. It definitely freaks me out a little bit, you know. But would I sell right this second? I think this is a nice spot to DCA out. I don't see any reason to, like, EX it out of it, though, no. That was a very fast pulse back to the upside above the POC. Jeez. Give me 1 second, guys. Sorry. All right, sorry. My daughter needed help. A little more continuation into the scalpers' objectives. Looking to see if they want to ride out the rest through for a larger move. Come here, Evan.
What? No, I don't want to.
Oh, I got you. You just wanted this was beeping. Thank you.
Your phone was beeping.
Okay. Love you, Annie. All right. Oh, sorry. I thought the microphone was muted. So we're back up to the seller's objective. They were able to rotate it back up to the upside. We're still a little bit in a difficult spot here with more continuation up. I'd like to see further objectives if they're able to rotate it further, but we are hitting, I mean, this is a big objective, right? We're hitting that scalper's target. Obviously, the 2-to-1 in this case is significantly farther beyond. Where's the 3-to-1? That's not too far. I would like to still see if we can get another pullback to re-up more, but if it's just going to run, then I'll let it go. Daughters need a pretzels. My daughter loves pretzels. Man alive. Those are like the best thing in the planet. Got a lot of continued volume going on. Jeez, what the heck? What happened? I just saw the, I don't know if that was right or not. The viewer count just went up to like 45 for a second. That was crazy. It must have been a bug because it went right back down again. It freaked me out. Getting a little bit of a pullback still, which makes sense. Would like to see if we can get a bit more pullback before adding more risk to this. The 4390s testing on the S&P. Oh, I'm sorry, just kidding. The POC just shifted as soon as I said something. Right to 4388. Looking at the reversals off of the low side, we've got an L4 into an L3. Lovely confusion there. Back into an L1. I'll increase risk a little bit because I do like this for a continued rotation back to the upside. They're trying to get the POC bounce on the bigger picture. Still doesn't fit for a swing trader on the 15-minute though. Scalpers targets are back at 15,000s. How do you manage trading? You get used to it. You get familiar with multitasking. It's easier because there's only one right now. The other one's at science camp, so. That makes life a bit easier when you only have to try to wrangle one. More continuation to the upside. Oh, I'm with you, man. Some days, I tell you. Now that exit there is going to do my average dirty, so I've got to remember where I'm at. We're still above that area. Massive outreach here. Big pulse to the upside. I'm going to utilize that final drive back up to exit out of that. So all in all, the way that ended up was break even with that move back to the upside. And again, we knew that we were wrong the whole way down. It's just about the trade management. Along the way, though, we have to make sure that we're still making the risks in the right places. We finally got the target back to the upside. Now I'm curious to see if we can get a re-up back on the downswing. The thing is, we're back to the original entry point where the longs were stuck from, right? So the fact that we're right back here again is troublesome. The longs may have a shot, but this is going to be a really tough area, unless they can just rip a hole through it. Well, unfortunately, that one, no. That one's not going to do a whole lot of anything, but back to break even it is. Oh, yeah, for sure. And keep in mind, this is on the NASDAQ Mini. This is something that is still flexible on the micro, as long as you're keeping your risk in check. You'll notice one thing that I never like doing. I typically almost never go over 10. Whether it's the micro, the mini, any of them. When you go over 10, and this is something that you learn with the School of Hard Knocks, I guess. But when you start jumping over 10, psychology plays a really big role in what you're doing. and it starts really messing with your head. And everyone's a little bit different. But when I'm doing a room and trying to stay interactive with people, doing more than that, it's just my head's going to be in a different place. So it makes it almost impossible from that standpoint. So the trade-off for me is just I don't go above 10. As long as you're under that, even on the micro scale, that would just be one mini, if you will. You just got to keep your risk in check and make sure that you're in the right place. But, you know, that's what you're looking to do. Hey. 2 months strong. 2 months strong. Welcome. Get the 2-month Pikachu. I think I figured out my announcements. I apologize if I missed some of the other ones for you guys, but I think as long as they happen while it's on stream, it's good. Anyway, 10 o'clock is right around the corner. We've got the market still kind of jerking around here. The larger break-even points potentially a little bit further up. I was hoping for a deeper pullback. The POC is just whacked way down there. 10:30 inventories are right around the corner with crude. They're not really doing much. All right. Nice drive back up. Yeah, we just had a video about managing a trade that runs away against you, didn't we? It wasn't too long ago, at least. Maybe I'll cut this one out. This would be another good example. I know people like seeing when you get slapped in the face. You learn more from it, though. You know, I mean, let's be real. You learn more from the times where it's hard than when it's easy. It's all about the trade management, staying calm. And understanding where, you know, if you can't stay calm, then don't trade that way. There are plenty of times inside of here where you could have just taken the loss. You didn't have to manage it with a build-in. But, you know, I like it that way. Still a little bit stuck, trying to figure out what they want to do here. I'm in full belief that a lot of the bulls are utilizing this drive back up as both a 2-to-1 objective from their averages down at the lows, as well as break-evens from their earlier entries. So it makes a lot of sense seeing it get stuck here. If it's going to rifle through this area, they've got to work through the 8850s? Yeah, 8850s. My weak heart and sweaty palms will let me do it. Well, and again, there's absolutely nothing wrong about that. You know, we're kind of being facetious about it, but if you know that about yourself, then really plan accordingly. Right? Don't take it and you'd have hard stops. That's the way that you would manage against that. You'd utilize your stop locations, which in this case, you know, would have to be from a swing trader's perspective. I just don't think it fits the swing trader's perspective, which is what we were saying the whole way down. You're definitely more of a scalper here, and it didn't work. Now, that's why I'm willing to build into that trade, because from a scalper's perspective, scalps usually work. The whole point of scalps is you're trading risk for probability. So when it doesn't, that means I know a lot of people are trapped. And I can count on the way that those trapped traders will manage their trade so that I can manage it along with them. So, I mean, as far as the move is concerned, this was kind of a scalp to begin with that totally failed. And like we were saying, while it was cutting down through here, it's like, well, this is pretty obvious that it's wrong. You know, like if it loses this area, it's probably going to 50s. And then when it got to 50s, which I tried buying into a little, if it loses the 50s, it's probably going to, you know, all the way down. Now, if you're waiting for the bounce, you might not have gotten a good enough one, or it might not have happened yet. Sometimes that happens too. There's no good answer sometimes, you know. But as long as you're managing them appropriately and staying within your risk tolerances, you're okay. You're fine. Make sure your trader's math works out. Oh, I totally agree with you. Building in is not for a new trader. It's for a trader who's earned the right to do such trading, right? And I mean that in not a mean way. I mean that in a nice way, because it's an incredibly easy way to completely devastate the rest of your life, right? If you manage a trade incorrectly, you end up like Enron jumping out windows, right? And in a very serious way. Like, I mean, it's really nasty if you're on the wrong side of it and you don't know how to manage it appropriately. And that's usually what happens with most people. They do it too early. They don't know what they're doing. They're not able to hold themselves accountable for their stops, and they get annihilated. Of course, people don't like hearing that, but, you know. I 100% agree with you. So just as an example, before we jump over to the other side of things, thank you for answering that, Stephen. I appreciate it. We've still got to make sure, like we were talking about, that the trader's math is correct. I know in the end it might not have worked out very well, or it might have been a break even. I think it worked out incredibly well, but we got to check the trader's math, right? We've got to make sure, hey, are we trading appropriately? And we can see from the numbers, dollars and cents aside, that doesn't matter, right? Look at the probabilities. If you can't trade one, you're not going to be able to trade 100. 50% accurate, basically a little under 1-to-1. Like I said, it was basically around break even. So I know that my trader's math is going to end up right around where it should be. You don't have to do all the numbers, but you can, just so that you can see it. 50% of the time you have a average winner of 130, and 50% of the time you have an average loss of 150 minus 6,500. And my average trader's math, when I'm right, is around 800 to 1,000. And when I'm wrong, it's around 800 to 1,000 in the negative. So I know that from a trader's math perspective, I did my job. I did what I was supposed to do, right? I know my management was what it was supposed to be. That's the important part that you're looking at here. Whether it was a break even or a losing trade or whatever, it doesn't really matter. The important part here is that your trader's math is still lining up correctly. Because if it's not, you're doing something wrong. Now, if that number was like 2,000 or 3,000, I know I did something wrong. Because that's out of whack from my norm. It wasn't. It was in line with my norm. So, always good to check. What should you do when sellers do not allow a pullback? So that was what I was mentioning briefly there. And actually, let's save that for the extended session, because there's a few things that I'm going to talk about that is going to be more on the members side of things anyway. So I'll get to that question in a little bit. Let me finish off the YouTube side because we're running a bit late, and then we'll transition over. So let's finish up on that side. I think I got all the questions taken care of, though. I send you an email for trade review. I'm not sure if you got it. Let me take a look. I typically don't look at my email while I've got... I don't see anything. JHB at SSFTG.com, right? Juliet Hotel Bravo at Sandy Foxtrot Tango Golf. Did I do that right? I think so. Anyway, I don't see an email, so maybe try again? Question mark. But that's going to do it. If I did miss any questions, feel free to shoot those via email. That's really weird. If I didn't reply to it, I don't have any pending emails in my inbox. So maybe send it again just to be safe. I didn't see it, though. Unless I responded to it this morning and I'm forgetting about it, which is totally possible. Yeah. But just resend it. Maybe it got jumbled up somewhere. Anyway, enjoy the rest of the day. I hope you had a great day of trading. So far this morning for me, basically winding up at break even minus commissions. So basically a fresh start. Here we go. Like I said, though, if I miss any questions, feel free to shoot me an email, jhb@ssftg.com. Until tomorrow, though, rest up, and we will talk to y'all then. Thanks.